and welcome back to KTN Morning Express. I'm Michael Karanja. Now, about a month ago, Kenya rebased its economy, and one of the things that was highly to happen after that happened was the attractiveness that investors got in Kenya's economy. And one person who's my guest today is here just to tell us about what investors are seeing in Kenya's economy and how that is leading to the growth of private equity funds as well as real estate funds. And I'm now joined by Edwin Dande, who's the CEO of Cyton Investment. Edwin, just right off the bat, did that rebasing change the way you look at Kenya's economy and in terms of sectors that you are now willing to put more money into?
Thanks a lot, Michael. I'm glad to be here. For us, the rebasing was just an affirmation of what we already know. Yeah. It is an economy that is growing, and not just in Kenya, but in the region. And maybe if I just step back a little bit and explain what we mean that it's an economy that's growing. Yeah. We look at about 3 to 4 things. One is macroeconomic stability. You look at interest rates, inflation, exchange rate over the last 10 to 15 years. Yeah. They are more stable than they've ever been. So macroeconomic stability is good. You look at demographics, young growing population, rapid urbanization, very attractive for doing business. Then you look at 2 more indices, ease of doing business and governance. Governance essentially, is it a free society? Can you speak your mind? Those 2 indices are going the right direction, and they're at the best they've ever been over the last 10 to 15 years, not just for this country, not just for the region, but for sub-Saharan Africa. So that makes for a very attractive place to invest, and then you can invest either in the public markets or in private equity. So the rebasing for us just confirmed what we already knew about this economy. Yeah.
When you look at investor attraction, we've always known that Kenya, by one way or the other, ranks very unfavorably when it comes to the ease of doing business. But when you look at stats, Kenya attracts almost 46% of total private equity deals in the East African region. Perhaps what are investors seeing in Kenya other than those small bottlenecks that exist that actually excites them about they'll actually get high returns for the investment?
Okay. We don't rank very well in terms of ease of doing business, but what one ought to look at is the direction. Directionally, we are going the right direction. If you look at a lot of, for example, we take Nairobi County, it's trying to have a lot of things done digitally or electronically. So that is improving. Now, while the anecdotal story or what people might hear about Kenya might not be that good, when you really peel the onion by those 3 or 4 metrics that I talked about, macroeconomic stability, demographics, ease of doing business, you see a very vibrant economy. We are located at a place that is the envy geographically. We're the gateway to the Eastern Africa region, and Kenya has a lot of good stories going for it. In terms of tourism, we have some of the best destination in terms of wildlife or beach destinations. In terms of just people hearing about Kenya, one of the most powerful people in the world has a Kenyan heritage. In terms of sports and athletics, we have some of the best runners. And
so it's exciting talking about Kenya.
Yeah, there is very little about this country that is not going the right. We have our challenges, but Kenyans are some of the most educated, most numerate, most literate people in terms of this region. So it makes for a very attractive place for global brands like Visa, MasterCard, American Express, Google to base their headquarters right here in Kenya.
Right. And what are some of the areas that people like yourself, fund managers like yourself, are actually looking at with the most excitement in terms of investment?
For Cyton Investments, the team is focused primarily on real estate. Now, when you talk about real estate, most people will think about buildings and construction. But you take an average Kenyan, they can't do construction, they can't buy the land. However, they are willing to invest so that they can participate in the attractive growth that is going on in the real estate sector. So an investment company like Cyton Investments, what we do is that we work with developers, and one of the leading developers in this country is Econ. So we have a partnership with Econ where Econ actually does the developments, and then we will convert that real estate into an investment product so that any individual, any family can then access that real estate through an investment product. I'll give you an example, Michael. If you go buying shares in, for example, Safaricom, the underlying is the engineering, telecommunications, the mast, all the hardware that they have. Then it is turned into an investment product in terms of shares for you to buy and then get to participate in the growth in the telecommunication sector. Real estate is one area where there is a need for the ability or for a platform that will turn that brick and mortar into an investment product that families, individuals can invest in and secure their financial future. So real estate is a really big area of focus to us, and I think our platform with Acorn is a unique platform to address that issue.
Yeah, and 2 weeks ago, I think it came as a surprise to many who were in the know of what Acorn was planning for, and 1 month old Cyton got the rights to manage $40 billion with what Acorn is trying to look for property development. Now, you seemed excited about 2 weeks ago when that announcement was made, but just asking, how then do you raise that capital? I know you said you're very excited in the abilities of Cyton to raise the funds required for that project, but just looking at where is the money coming from?
Michael, before I answer the question, where is the money coming from? Yes, Cyton as a registered company is 1 month old, but behind Cyton is an investment team that has worked together over several years. Myself and also our chief investment officer, Elizabeth Nkuku, who is probably the most qualified portfolio investment manager in this region, and then Patricia Wanjamu, who's our head of legal. These are people who worked together. So it is really doing the same trade, the same business, the same thing we've always done under a new brand. So, and in investment is like a practice. You know, if a doctor moves from one hospital to the other, as a team, it is still the same surgery team doing the same surgery that they used to do. So the length of existence of a brand is not that important as much as the seasoning of the team and how long they've worked together. That's the primary thing you look at in an investment team. Going back to your question, where will the money come from? Cyton Investment is focused in terms of, is focused on 3 main areas. Yeah. One is what we call the sophisticated high net worth investors, people who will give us chunks of money to invest for them. Second is institutional investors. Institutional investors are both local and international. International investors, we bring them through the traditional private equity fund structures, and the local institutional investor, we go to them directly. Third, which is very unique, Kenyans in the diaspora are sending to this country about 125 billion shillings every year. Yeah. A good chunk of that is for domestic use, but a good chunk of it is for investments. There is no institution that has an online platform that can address the investment needs of the diaspora. And that's why we're excited about what we'll be launching this Thursday. Cyton Investments will be launching a brand called Diaspora Solutions by Cyton, which is an online platform for Kenyans in the diaspora to work with a trusted counterparty to access real estate, to access investment products in a way that they've never had access to before.
Yeah. Just looking at that, how excited are you that there's actually that enough capital to be mopped up by not only yourself, you know, there are many of you looking for the same slice of the same cake?
Michael, for an investment manager, of course, it's exciting to have pools of capital that you can put to work. And when you put them to work, it's not just about return for the investor, it is also making a difference in the neighborhoods or in the communities where that money is invested. Now, while the money is a lot, the work of investment management, just like any other work, being a business editor or journalist is very hard work to do it well. You take a lot of responsibility as a team to take people's money, identify opportunities, evaluate them, and commit that capital, and be able to, after a reasonable period of time, go back and be called to account. So did you make money or didn't you make money? Luckily for us at Cyton Investment, this is a team that has managed together over 50 billion shillings in assets under management. For the time we managed that kind of money, we made incredible returns for our investors. So the track record is there. It speaks for itself. So for us, we are very excited to be creating investment products for the diaspora.
Right. normal PE funds work in the sense that they come in, enter a business, generate returns, exit. Is that the same model that Saito is looking at, or you are in projects for the long term, being strategic investors in certain projects?
Both models. The reason why the PE structure works well is that there's a defined period of time through which you have to identify an opportunity, create value, exit, and return that money to the investors. So everybody who gives money at some point expects it back. And that's why people like the traditional PE structure, because within a period of time, typically anywhere between 6 to 10 years, you must return that money to the investor, and with the return expectations that they had. There's another model where what we call permanent capital. You have that money for as long as you've invested it. That's another model where people want to put money to work for let's say 20, 30 years to grow their pensions, so that when they retire, they have a safety net for themselves. So our model is very flexible. And the economy, while it is vibrant, growing, it is still small enough that you have to be multi-strategy. You have to have several strategies. And for us, we have both the PE strategy and the open-ended strategy, where we get the capital and hold it for the very long term.
Obviously, Aecon is one partner we know of. Are there any other sectors that you're looking for, or any other partners, or you're just going to build as the company grows?
Where we have what I would call first a unique opportunity for the investor. You know, investment management at its best is really about two people: the investor and the community. When you take care of those two things, you as an investment company or an investment manager, you will do well. So where we see the most unique opportunity is in real estate. There's no other platform where you have an end-to-end solution from the developer who's doing site identification, acquisition, doing the development, coupled with an investment platform that is bringing investors into these opportunities. So that's our biggest focus right now. But we also like financial services. This theme of financial inclusion is still a very attractive place for investors to put money. We like education. Kenyans generally are people who like education, and education is probably the single biggest determinant in terms of the standard of living for an individual. So we would like to attract investors to put money into education. Healthcare is very attractive. And in fact, what I would say is that we are still in an economy whereby the constraint is the supply of goods and services. The demand is there. So you pick any sector and put good people behind it, put good management behind it, you will make money.
Just listen to people from Aecon. They've always talked about the lack of investment grade property, just as we wind up. When you talk about investment grade property, what are we exactly looking at? Do I just put up a commercial building and don't expect it to be that kind of a building where someone else will be able to come and say, oh no, I can invest in this kind of property and actually generates a chunky return?
What we mean by investment grade property is that it is property that can sustain a stable return over a long period of time. To be able to sustain that return to the investor, because I always remind people it's all about the investor. To be able to sustain a good return for the investor, you must identify a good location. That means a location where people will come, whether it's to shop or whether it's a hotel, they're likely to sleep in those hotels. Once you identify a good location, you have to put a powerful concept. Essentially a concept. Why do people go to one mall and not another mall? Why do people go to one bar and not the other bar? It is the nature of concept that is put on that real estate. And once you put that concept, you have to have good leases, good tenants who are going to pay the rent. When you have all that together, an investor is willing to give you money because they will get their yield, let's say 8% per annum. There are very few buildings in Nairobi today that can give you an 8% consistent yield. So what we mean by investment grade real estate is the title has no issues, the leases are registered, the location is good, the concept is good, and most importantly, it's delivering a good return to the investor over a long period of time.
Just looking at Nairobi, there's so many buildings coming up. If you just look at them and then you look at that building and say, no, I don't think that one is viable. Just looking at the kind of leaseholding people have, the titles, Why hasn't that been taken seriously by people who have been doing property over as many years in terms of just getting property that will be able to sustain itself over years?
There's I don't know if it's a joke, but it's a phrase you always hear. Every Kenyan in one way is a developer. Somebody buys a quarter an acre, half an acre, then they do construction. Now, to be a developer and to produce investment grade real estate, you have to start by research. You have to have data. You have to know what is the underlying socio-economic trends. So I'll give you a very simple one. Global brands are setting up shop in Kenya. Now, these are brands that will want grade A office blocks. They will want them in a place that is not very congested, like CBD. So once you understand that trend, then you will go look at the spots where these people would like to set up shop, and then you develop grade A office blocks. Another trend is that the region is growing. Companies are becoming regional, whether it's companies like, for example, I'll just pick a name like Equity Bank, for example. It's in the region. The executives and the managers will be traveling. As they travel, they want consistent experience in a business traveler hotel. Once you have identified a brand like that, then you develop around that brand, and you can't go wrong. So the difference between some of the buildings and some of the developments you see coming up and the kinds of buildings and developments we are working on is that ours is based on hardcore research and data.
All right. Just in closing, Edwin, company's 1 month old, years of experience in the team. What's the future for Cyton?
I think the future for Cyton is certainly bright, because ours is intertwined with the future of the economies of the region. And if you look at data, economies in the region are growing 5 to 7% over the next 10 to 15 years. People want to invest. The diaspora are hurting for an investment platform and investment product. So really, what could go wrong is just execution. And we're very good at execution. It's rare that you find a management team living together, doing the same thing, staying together, and once things are settled, right now there's quite a bit of noise, and honestly, if you move as a team and there's no noise about you, tells you that these guys are not that good, they were not doing much. But if you move as a team, and you are able to also couple up with a very good relationship like Akon, and there's all sorts of noises, rumors around you and the team, it tells you, look, these guys must be threatening to somebody somewhere. So for us, we are very committed, keeping our eye on the ball and delivering real estate, private equity to high net worth, to diaspora, and to institutions.
All right, thank you very much, Edwin. That has been Edwin Dan, the CEO of Cyton Investments, just telling us about the exciting space where private equity and real estate funds are living. We take a short commercial break, but when we come back, Sophia Wanuna will be handling our lifestyle segment, and you won't want to miss that, so don't go too far.